Alright, what's up everyone? Welcome back to Compound Interesting. Today's video is a heavily requested video, and not by my viewers, actually by my good mates. So my best friends have kind of been nagging at me to make a video like this, kind of explaining exactly how I research a company. So that's the reason I'm bringing you this video today, and I think it can provide a huge amount of value to both the newbie investor, because I'm going to go through pretty much all the basics and exactly how I analyze a company, but also it can provide some tips and tricks for the more experienced investors, that maybe some new ways to analyze a company or new ideas that you may not have known yourself before, or some new insights perhaps. So that's my goal with this video. So for those who are waiting for the CRISPR video, that's gonna come next, but my friends said they'd kill me unless I made this video next, so that's why this one's coming first. So yeah, the CRISPR video will be coming up next. So before we begin, I just need to say that this isn't an exhaustive list of everything you can do to research a company. There is no limit to how much you can research a company. I'm sure there's so much that I'm going to miss in this video, so just keep that in mind. And if there are things that I missed that you think are really useful, make sure to comment them below so other people can know and I can know myself. But this is just what I normally do and the path that I normally take when investing in a company or when researching a company. And I always feel that the amount of money that you put into a company should be directly proportional to the amount of research and the amount of conviction that you have in that company after committing all that research. So if you want to commit a lot of money into a company, make sure you've really committed the time into researching every potential risk and every potential growth factor for that company, and that your conviction is very high with that company. Whereas if you're just having a kind of a more speculative, kind of just a dabble amount of money just to get the juices flowing in that, the interest flowing in that company, then you can kind of put a smaller amount of time in research and money. And sometimes I'll spend 2 minutes researching a company and straight away I'll realize, no, this isn't a company I want to invest in. There'll be something or a couple of things that I know straight away that this isn't really going to be the investment for me. So I might just stop researching straight away, or I might keep digging in if I'm actually researching a company for a video. But sometimes you don't waste time researching a company if straight away you can see that it's not an interesting company for your investing style. So lastly, just before we get started, I just ask that you smash the thumbs up button, get the small channel off the ground, hit subscribe if you haven't already, and make sure you've hit the notification bell, because on the small channel videos won't appear in your recommended, so make sure you've hit the notification bell so you get notified when a new video comes out. So with all that said, I really hope you learned something from this video, and let's dive right into my computer and I'll show you exactly how I like to research a company. Alright, so just before we get started, I just want to say a massive thank you to everyone who subscribed. I didn't think I'd get to 500 subscribers so fast, so thank you all so much, and for all the wonderful, lovely comments that everyone's been leaving. It's really motivated me to really put more and more passion into this side project, this little project of mine. So thank you so much. I'm not going to go crazy thanking you, but it really means the world to me with all the comments. So with all that said, thanks again. Let's get cracking straight away with an example of how I'd analyze a company. So in today's video, we're going to pretend to be analyzing Tesla for the first time, because why not? Tesla's going crazy at the moment, so I think this would be fun. First, I generally like to look at the numbers for a company, and there's a couple of websites where I like to look at the numbers. So let's start off. Oh no, sorry, wrong website. The first website I like to look at the numbers is Yahoo Finance. So just type in Yahoo Finance Tesla, and it's the first one that comes up. So this is where I get all my numbers basically, and there's another website that kind of lays it out a bit more that you may or may not be aware of, but this is the first website I like to go to start analyzing company and see if it's a good investment or not. Okay, so now we can see this is all the numbers for Tesla, the home screen for Tesla. I like to usually look at the max. So this is the timeline, the max. And I'm going to go through all my favorite metrics when analyzing a company. And my favorite metrics kind of vary from what type of company I'm researching. So for a growth company, so the metrics that I like to look at will be different for a growth company rather than a dividend company or something. So for a growth company like Tesla, obviously the PE ratio isn't going to be very useful. Right now their PE ratio is NA, so they're not really earning any money. So the price to earnings ratio doesn't make any sense if they're not earning anything. It's infinity. Most people like to look at PE ratio and think that's the most important metric. But for my type of investing, which is growth company investing, I don't look at the PE ratio. It's not one of my favorite metrics. And another thing that I don't really pay that much attention to is the price. So I don't really look at the price of a stock because it doesn't really mean anything. So another thing I don't like to pay attention to is the chart. I don't really care so much about the chart and the price. That's kind of more for short-term traders or just traders in general. Long-term investors like myself don't really care about the price so much or what the company's stock chart has been doing recently. That can kind of give us the last missing puzzle of potentially if it's overvalued or not, but it doesn't really give us that much information about the company's underlying fundamentals, which is the most important metrics that I like to look at. So what I do like to pay attention to is the market cap, and in my head, I like to compare this market cap to similar companies. So a market cap of 258 billion. I could compare that to other car companies, perhaps with Tesla, or other tech companies like Amazon. So now I know, okay, the market cap of Tesla is 258 billion. So it has the biggest market cap of any car company in the world. Do I think that's fair? Like if I had 500 billion to spend on a company, would I fork out 258 billion for Tesla? And the answer for me is yes, I would still fork out 258 billion for Tesla. So this price is still fair price in my eyes. And the reason I think for Tesla, even with the highest market cap of any car company in the world, I think over the next 10 years, they will make the most revenue by selling cars out of any other car company as everyone switches to electric. So it makes the most sense that they have the highest market cap of any car company in the world. Okay, so that's everything I like to look at for this page on Yahoo Finance. Now, this is one of my favorite pages on Yahoo Finance. Is the statistics page.
You know, man's international now, fam. Check the statistics.
And that is because you can find my favorite metric of all time for analyzing any company. And my favorite metric is the price to sales ratio, particularly for growth companies. So I like to look at the price to sales ratio because a company can't fake its sales. A company can't really fake its revenue. A company can kind of play around with the numbers with earnings. So there's different ways that companies fake out the amount of money that they're earning. And I'm not going to go into in detail of how they can do this, but there's many ways they can kind of make themselves look like they're earning more money than they actually are. But you can't fake how much money people have paid you for your products or services. So that's why I like price to sales ratio, along with the fact that growth companies, generally the earnings don't provide a good picture of how the company is actually doing. Whereas with, say, Johnson & Johnson, a legacy company like that, the price to earnings ratio gives us a very good picture of the valuation of the company. But with growth companies, price to sales is much better. And I like to look at the historical price to sales ratio to see if it's overvalued or undervalued. And as you can see over the last few quarters, Tesla's price to sales ratio was a lot cheaper. So right now, the price to sales ratio seems a little bit higher than previous price to sales ratio. So it's overvalued in comparison to previous quarters. So next on the statistics page. So I'm going to run through all the numbers of what I like to look at in a company, and then we're going to go through where I find the fundamentals and the actual vision of the company, which is the most important part of analyzing a company, in my opinion. Okay, so the next thing I like to look at on the statistics page is the percentage that's held by insiders. So that's the number of shares outstanding that are held by people who are actually working in the company. And for Tesla, it's really high, 20%. But that's because Elon Musk himself owns a lot of Tesla stock. So usually you want this number as high as possible. And it's actually better if the CEO doesn't actually own all the stock, because sometimes the CEO just wants to show that he owns a lot of stock to make investors believe in the company. But if people who just work in the company own a lot of stock, they have the best knowledge about the company, better than anyone else. Better than me or anyone else could have on the company. So if they're holding a lot of stock, that's a really, really good sign. So try and find out let's find out how much percentage of Tesla Elon Musk own. Okay, that's probably what I'd look up. I'm not going to go through it right now, but let's see how much that everyone apart from Elon Musk, what percentage that they own of Tesla, and compare this to other companies. So you'll see with crap companies that the percentage held by insiders is very low. Another thing I like to look at more out of interest rather than I like to look at the percentage held by institutions, but not for any particular reason, just out of curiosity, and the short percentage. So Tesla is one of the most shorted stocks in the stock market. So it's 10% of shares outstanding are shorted. Well, actually 8% of shares outstanding are shorted. And if there's a high percentage shorted, that usually means the stock will be quite volatile, as when shorts are forced to cover their positions, they'll have to buy a lot of Tesla shares. So that's why Tesla's stock price is really, really volatile. One reason. Next, I like to go to the financials. The financials page, you can get information about the total revenue of the company. And I like to see that this is growing. I like to see revenue growing really, really fast. As I mentioned, revenue and sales, same thing, is the most important metric for me. And a low price to sales or price to revenue ratio is what I want. So ideally, I want a fast revenue growth rate. Like you can see, Tesla's is really fast, like 50%, 50%. Well, that was like 80% there, and less so there, only about 20% in 2019. But I like to see a really fast revenue growth rate along with a low price to sales multiple. That's the ideal situation. And then maybe I'll have a look at the income. But again, I don't really pay so much attention to the income personally. That's just my way to do things. Most people will say that's not the right way to do it. Earnings are the most important thing. But for me personally, revenue is the most important thing, because with a growth company, they can switch on earnings once their growth has finished. And Tesla has a much longer way to grow, in my opinion. So they're kind of following the Amazon model of not caring about earnings and just making themselves a huge company that everyone needs and loves. So after I look at the income statement, I'll go to the balance sheet. It's really, really important. The balance sheet's really, really important. One of the most important things that you can look at when analyzing the numbers of a company. So I just like to expand all this. And the two most important metrics that I like to look at on the balance sheet are the cash and cash equivalents. So for Tesla, we can see 6.2 billion. And they used to have 8 billion, but they spent a lot of money in the COVID-19 situation. So you can't fake the amount of cash that you have in a bank. So that's why I like to look at cash. However, I don't really like to pay attention to total assets, because you can kind of, again, inflate the numbers of your total assets. So stuff like inventory, that's, with Tesla, yeah, they'll probably sell all those cars. So inventory is all like the stuff that's in your warehouse that has yet to be sold. But say for like an older company, like, I don't know, Foot Locker, they might have all these shoes that are out of fashion, and they have it down in their inventory at full price of what they would sell it if this was still the trendy shoe of the time. But it's not actually worth that, because maybe they won't be able to sell it, or they won't be able to sell it at all, or they'll have to sell it at a lower price. So inventory, don't maybe cut that down to half of its worth. And another thing that's often in the total assets that I don't really like to look at is goodwill, because that's not actually a physical, you can't really sell goodwill. It's not something you can instantly change in for cash. So what goodwill is say if Tesla acquired, let's say Maxwell Technologies, they acquired a battery company. They acquired a battery company for 2 billion. That money's gone somewhere. They spent 2 billion of cash, and that cash has now been converted to goodwill, and the goodwill is now owning the Maxwell Technology companies. So yeah, it kind of counts, because now they own Maxwell Technologies, and that's what the goodwill is. So I hope you can kind of understand what I mean, and the way that goodwill isn't really, it's not the same as having cash in the bank. So just keep that in mind when looking at assets. I usually like to look at cash, and maybe I'll pay a smaller amount of attention to the other amounts. And the thing on the bad side that I like to look at is long-term debt. And obviously you want as low long-term debt as possible, because you can't fake long-term debt. That's money that has to be paid. And then your other current liabilities and all liabilities. So Tesla's total liabilities, 26 billion, and total assets, 34 billion. So they can't really sell their factories. Oh look, they have their goodwill here, so they don't have very much goodwill. Intangible assets, again, nothing. Don't bother listening to that. This is what their factory is, how much their factory is worth. So they can't really say, oh, they can't really sell the factory to pay off their debt. So I don't really count that into a good balance sheet. So we want more cash than long-term debt, ideally. However, Tesla doesn't have that, so their balance sheet isn't 10 out of 10. It's not smashing it, in my opinion. All right, so that's everything on the balance sheet. Another couple of things I like to look at. I'll have a quick look at the analysis section, and I'll go down to sales growth, year estimate. So this is the estimates according to Wall Street of how much their sales are going to grow. So for the current year, their estimate, their sales is only going to grow 10%, which is pretty low, but it's obviously because of the coronavirus. And then the next year, we're getting 40% sales growth, which is pretty high. Now, personally, I think Tesla will beat those numbers. So Tesla will probably get, sales growth maybe 10% this year, and the following growth, I'd say at least 50% growth. But yeah, that's something I like to look at on this page. And this is next 5 years growth estimates. I also like to look at that, and that's their earnings growth over the next 5 years. And you can see it's such a huge number because Tesla doesn't really earn any much money. So it's not really very useful metric for this company. All right, so next, when I'm analyzing a company, the next website I like to look at is Hypercharts. So this is hypercharts.co. This is created by Galileo. I'll link his YouTube channel in the description, but him and one of his friends or something made this website, and it's excellent. It's excellent for analyzing companies, but it's all really visual rather than just looking at numbers. I'll show you what I mean. So let's get up Tesla and look at all the amazing information they have on Tesla, for example. So they have everything done in graphs rather than in numbers. So normally you'd have this kind of information, which you can't really understand. But when it's in a graph, it's much easier to understand. So we can see these are the vehicles delivered over the last number of quarters. I like to look at it on an annual basis. So you can see Tesla is delivering way more and more vehicles at a really, really fast growth rate. Now, Hypercharts is free, but you can get I have the premium version, which is $10 a month if you're interested in it. Otherwise, the thing I like to look at most on Hypercharts, so yeah, revenue segments, I like to look at a growing revenue. So remember on Yahoo Finance, we were just looking at the numbers, but here we can see the revenue growth as a graph, which is much more easy to interpret quickly. So we can see the revenue segments broken down, so that's nice. So here are the things I like to, so this is the margins, the operating margin and the gross profit margin. Yeah, this is the chart I really like to look at, and this is revenue growth year over year. So as we can see, this data point here really kind of skewed the numbers, but if we ignore that, we can kind of see Tesla's revenue growth is the blue one. So its revenue growth year over year has kind of been hovering around 50% per year, or averaging around there. And this year it's done much worse with only 14% revenue growth. So hopefully they can get back up to 50% year over year revenue growth. But that's my favorite metric here. And you do need the premium for this graph. However, you can actually find this online for free. If you search historical price to sales ratio, that's what I like to look at. Historical price to sales ratio, Tesla. This is another metric that I like to look at. Macro trends is the one I use. So I like to see the historical price to sales ratio over the last number of years. So here we can see the historical price to sales ratio and whether it's undervalued, overvalued. So over the last number of years, as you can see, Tesla's price to sales ratio hasn't been this high since 2015, but it's not extraordinarily high in comparison to its history. It has been higher before, but in comparison to its recent history, the price to sales ratio is very high. So a little bit overvalued maybe. Overvalued in comparison to previous price to sales ratio. So that's where I get that information. Yeah, so this is the same metric that I just showed you on macro trends, but a little bit easier to read on Hypercharts. So as you can see, it's actually higher than this now. So it hasn't been updated for Q2 because Tesla's just shot up recently. But yeah, there's more energy storage deployed. We can really see there's a lot of information that you wouldn't find anywhere else on the Pro version. Okay, so that's pretty much everything I like to do when analyzing a company's numbers. And from this point, I'll kind of have a good picture of whether the company's overvalued or undervalued or fairly valued. And right now, looking at this, I'm saying Tesla is probably overvalued, but maybe when I look at the fundamentals and the vision of the company, then I'll start to think, okay, maybe it's fairly valued for where the company is going. Right, so where do I get the vision of the company? Simply go investor relations. For any single company you want to invest in, just investor relations and then the name of the company. So every single company has an investor relations webpage, and there's always really, really interesting information that you can find here. So yeah, as I said, I usually have an idea of all the numbers, the relevant numbers for a company, but sometimes there'll be numbers that won't be on Hypercharts or Yahoo Finance that are really important. So for example, for restaurants, one of the most important metrics is same store sales. So basically, one of their individual restaurants, are the sales in that restaurant, in that individual restaurant, increasing every year, rather than them just building more and more restaurants and increasing their sales that way? Are people coming back to the same restaurant and spending more money, or are more people visiting that one individual restaurant? That's the most important metric for restaurants or physical shops. And you wouldn't find that on Yahoo Finance, but you'd find it in the investor relations page. But for the most part, I know all the numbers, so I don't really like to look at the numbers on the investor relations page unless there's particular ones that I want to see. But I'll just go to their presentations. So sometimes they'll have these really, really in-depth PowerPoints. So let's have a look at Tesla's latest one. So you should really read all these. So you can read through all this amazing stuff. All this stuff that Tesla's offering us. So this is just the first one I saw, events and presentations. You can listen to their webcasts, and if there's, you can go to SEC filings. I always like to read the annual report for a company if I'm digging deep into a company. So 10K. So this is kind of in-depth. What does the company do? It's kind of a little bit boring. It's not so interesting as the PowerPoints, but you'll find out exactly all the risks with the company, because they're obliged to tell you all the risks when investing in a company, and you'll get exactly what the company does, but you might not get so much the vision side of stuff. The vision side of stuff is often found in the PowerPoint presentations. So here's the risks examples. We have experienced in the past and may experience in the future delays or other complications in design, manufacture, launch, and then it goes in depth. So yeah, try and read as many of these headings as you can, and maybe read the full paragraph if it's something that you're kind of worried about. And I also like to read the 10Ks are the annual reports, and then the 10Q is the quarterly reports. So read a couple of them, and as many as you can, depending on how interested you are in the company. Another thing I like to try and find is if they've ever had like video presentations or real live events. So I know Tesla does. So that they just had a full presentation and explained everything about autonomous driving. So I watched the whole thing, and it's really, really interesting. So if you're interested in Tesla, really recommend watching it. And because it's really, really long, I watched it at double speed. And yeah, you'll learn so much about Tesla from just watching it and get the vision of the company. And they have another one of these coming out soon, Tesla Battery Day. I think it's around September time when it's going to happen. But yeah, you can learn a lot from that company. Another investor relations page that's really, really good is the Square investor relations page. And they have really good PowerPoint presentations, which really dig deep into the vision and the mission of the company, which I think is the most important thing. So economic empowerment is we believe everyone should be able to participate and thrive in the economy. So we're building easy tools to empower and enrich everyone. So that's the mission of the company. And here they straight away have some amazing PowerPoint presentations that just make investing in Square so obvious. So you can see all the numbers, all the graphs, and they show you all the total addressable markets. Here we go. 100 billion addressable market, 60 billion addressable market. So $160 billion revenue opportunity for Square. So that's why it's valued at $40 billion, and an $85 billion opportunity there. Breakdown of that $85 billion opportunity. So really gets you, that's only one of their PowerPoint presentations, but I think you get the point. So that's all the investor relations page stuff I like to look at. After I've read through all the investor relations page stuff that I'm interested in, or depending how much I'm interested in the company, I'll research further and further and read as much as possible that's provided and watch any videos that are provided. That's kind of the base fundamental stuff done, in my opinion, but you can always do some extra research. So some examples of extra research are listening to interviews with the CEO. So for example, on CNBC, or podcasts. So Jack Dorsey has done a lot of podcasts. He's done a lot of interviews. He's done a lot of talks, not always talking about Square, but he has done a lot talking about Square specifically. So you can definitely find those podcasts and learn so much about the vision of Square and how it started and how Jack Dorsey thinks himself, because you want an amazing person like Jack Dorsey leading a company that you want to invest in. That's why Square is in my top 5 investments at the moment, as well as Tesla being my number 1, because I really believe in those CEOs. Another thing I like to do is simply search. I'll search Square stock analysis, and I'll read articles about on investors.com, or I also like to look on motleyfool.com. They also always have articles, and there will always be things that you miss about a company. So there's bound to be a million things that you missed about Square stock. And these articles by these really big stock investment websites and newspapers or media sites will always tell you something that you didn't know or you didn't find yourself, that gives you more deep understanding on Square or whatever company. So we can see this. Maybe I wouldn't have seen that in doing my own research of the company. But that's another thing I like to do. And of course, I like to look on YouTube. So I'll do the same thing on YouTube. Yeah, I'll watch other people's YouTube videos to get other perspectives and opinions on the stock, and being able to see it from a different viewpoint, and if there's anything I missed. And then lastly, another place I like to look is ARK Invest. So I talked about this in my last video, but ARK Invest, for example, has a really interesting article about Square that I just read. It was so super interesting. It was comparing the Cash App to Venmo, the two competitors there. But there's loads of different, for the kind of investing I like to do, this mightn't suit your investment ideas, but there's a load of different articles. Here's the one I read. There's a load of different white papers and articles on ARK Invest that you can read. Just maybe even to just find stocks. Oh yeah, you have to sign up to get the white paper. And finally, the last thing that's also really, really important that you probably should do before investing in a company, if possible, is actually use the product or service and get a feel for it, and hopefully enjoy the product, like the product. If you like the product, then it's likely that other people will like the product. And if you can't use the product, for example, I don't have a Tesla Model 3, just do this, Tesla Model 3 review, and there'll be millions of reviews. You can look at reviews on YouTube or in blogs or whatever. Or you can ask friends who have the product or use the product what their opinions on it. So try and get a feel of how the customer experiences the product and enjoys the product. So that's pretty much everything I like to do when analyzing a company for the first time. There's probably a huge amount I missed, so please let me know what I missed. The free cash flow method and all these different ways to value a company that I don't know or understand. So I know I'm just your average Joe. I'm not some genius investor at all, but this is what I do. So hopefully you've learned something from my approach, and this can help you accelerate your investing career. So I really hope you enjoyed the video. If you did, please smash the thumbs up button. Leave your thoughts below. I read all your comments, and thank you so much again for the 500 subscribers. I'll be at 1,000 so soon. And more importantly, I really appreciate all the really nice comments that have given me a lot of motivation to keep going. So with all that said, I hope you enjoyed the video. I hope you learned something, and thank you so much for watching, and I can't wait to see you in the next one. Cheers.
Statistics.